Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the macro view for Bitcoin, taking a look at some of the on-chain metrics, seeing what's been going on there and whether or not we got any updates to wallet counts, etc. And we'll jump down into the charts as well, taking a look at Elliott wave theory, smart money concepts, support resistance, supply demand and all that kind of wonderful stuff. So as I get into this video, if you find it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, then why not check it out, linked in the description down below. It's a fantastic community talking crypto 24/7, and it's the first place that we go to notify you of everything that's going on in the crypto space. So why not keep a finger on the pulse of crypto by joining us down in Discord, linked in the description below. Okay, we're going to be taking a look at the daily and weekly timeframes, but before we take a look at the charts, let's go ahead and just review what's going on with the on-chain metrics and give everyone a brief update as to kind of what's going on here. So, top right-hand corner, we have the inflows and the outflows since the 1st of January 2023 through to the 1st of May 2023. Okay, so we have 3.4445 million going on to exchanges and 3.3830 million coming off the exchanges, which means more Bitcoin has flowed onto the exchanges during 2023 at a sum of 61,500 BTC. This basically means that it's slightly more bearish and has been bearish this entire bullish movement to the upside. There's been a lot more people moving Bitcoin to the exchange to be sold than we have seen coming off the exchanges being accumulated and stored. So this is not the be all and end all when it comes to trying to review whether or not we think the market is bullish or bearish, but it helps us understand that things here might be a little bit concerning and we should probably be a little bit more cautious with the market than just jumping feet first into a pool not knowing how deep it is. And in this particular case here, we can see 61,500 Bitcoin more on the exchanges than there was at the end of 2022 when prices were significantly lower. This almost seems natural in the way that you would think. People are looking to offload their Bitcoin, but again, that offloading of Bitcoin isn't something you would expect in a bullish market. You would expect higher highs and therefore people less likely to sell. So it's unusual activity. Not too unusual because this is exactly what happened back in the 1st of January through to the 1st of May 2019, right? We can compare that because we do have our current inflow outflow line graph and our 2019 line graph, right? And we can see that we had 5.9771 million going on in 2019 versus the 5.9777 million coming off. Now, this is actually pretty balanced. You can see it's almost exactly the same. In fact, you can see actually there's now a flip and we are more bullish here on the 2019, which a couple of days ago we were not. So you can actually see more is flowing off the exchanges, but we had a very similar start. Only difference really is that we haven't kept up with the pace of 2019 by any stretch of the imagination. And we have spoken about this a fair few times with the different variables and the different pieces of data in the background. We are not just mirroring 2019 when we have such significant differences in that underlying data, such as Fibonacci retracement levels, all-time highs being broken, previous all-time highs being broken to the downside, which is the first time in Bitcoin's history we've seen things like this. And of course, inflows and outflows that are actually vastly different to what we had seen previously, with a significant reduction in the volume in comparison to the last bullish market. So all in all, it's not looking overly positive. Now, when we jump into the wallet counts, what do we see? Well, we see a very similar story. We talk about this all the time. There's that retail money is what's propping the market up. Retail money is kind of what's flowing in. And therefore, if there's a buyer and there's a seller, which there always is, there's an inflow, there's an outflow, right? There's always a buyer and there's always a seller, right? There's no magical kind of pot of Bitcoin that people are buying from and selling to. Essentially, you're just transacting with each other and exchanges are taking a fee for being the middleman, okay? And that's an oversimplification because obviously the markets, exchanges and the market makers themselves are obviously also in there trading and doing various different things. But for the most part, you're really just transacting with each other. There's always a winner, there's always a loser, there's a buyer, there's a seller. And so when we see a lot of these wallet counts, and these wallet counts, right, are a specific type of piece of data that I'm looking for, right? We're looking for Bitcoin wallets that have over 0.01 Bitcoin. That means anything lower than 0.01 Bitcoin I'm ignoring because it's not important to me. Okay, so this particular wallet count here, this black line is on the increase. And it's basically a wallet has to have over 0.01 Bitcoin to be considered counted in this variable of this particular wallet count. So up here we can see that we have 11.8 million wallets that have over 0.01 Bitcoin, and it's been on the up, it's been on the increase, right? As we take a look at the other retail-sized wallets, we have the 𝗘𝗪. The 𝗘𝗪 is basically over 0.1 Bitcoin, and you can see that the FOMO level here is really coming in nice and strong over the last 90 days. And essentially what this means is that there's a lot of FOMO activity at the retail level. They're looking at the market thinking we're in a bullish market, we're going to the moon, and therefore they're providing liquidity. They are basically looking to buy Bitcoin, and someone is willing to sell them Bitcoin. Okay, so here we can see 0.1 Bitcoin. It's not the massive amount. It's definitely a retail investor. It's someone who is very vulnerable. And at the moment, we are hovering on the 4.3 million wallets that have over 0.1 Bitcoin. Now, our shrimps are basically anyone who has more than one Bitcoin. Okay, these are your people who are aspiring to acquire at least one Bitcoin, become a one Bitcoiner. Okay, and you can see the level of FOMO again is insane. It's huge pumps to the upside. So basically, they believe that they're in the bullish market. They're buying Bitcoin, and someone's going to be looking to sell them the Bitcoin, right? And you can see here we're hovering on the 994,000 shrimp wallets. Now, I've said before, and I'll say it again, I don't want these retailers to suffer. I don't want them to kind of succumb to selling pressure and lose money, etc. But at some point, I think that's an inevitability, right? And I've wanted these guys to hit 1 million wallets for practically a year at this point. So it's good to see that we're edging in that direction, but at some point, I do suspect we're probably going to have to lose a couple of 100,000 of these, and we're going to have to see a significant downshift in selling pressure from the shrimp at some point in the future. But for now, it's looking pretty aggressive in the way that they're pumping to the upside. But I will just stress the same thing that I've said before. There's always a buyer and there's always a seller. Right, and at the moment, we've seen 3 different wallet counts that are pumping to the upside, okay, and the number of wallets that are in existence that have a specific number of Bitcoin. And we have to consider how have they accumulated this Bitcoin. If the market is just bullish and everyone's buying, right? It's got to be someone's got to be selling to them, and who is that, right? And it's going to be in one of these data and one of these points. So dolphins, we can see over 10 Bitcoin, the high net worth individual, but still a retail investor. You can see that they're starting to come out. They're starting to waver a little bit here. They're not so convinced of the economic climate, and they're starting to panic a little bit. Now, I will say that they don't always get things right. And in fact, they very rarely do because they're a retail investor and they overreact. For example, we can see that they started selling here at $28,000 Bitcoin, and they started buying here at $30,000 Bitcoin. You can see the recipe for disaster. You don't buy high and sell low. You do it the other way around. You buy low and you sell high. So typical retail investors, they happen all the time. You can see it time and time again over here, for example, selling at 28K and then buying at 27K. Retail investor mentality, the overreacting to price movement, etc. Fear of missing out, FOMO. But when we start jumping up into the larger sized wallet, the institutional players, the big money, the billionaires, the multimillionaires, the market makers, there's always a buyer, there's always a seller. And we can quite clearly see that the money that, or the Bitcoin that is being made available to be sold is coming from the larger investors, the ones who are deciding the market direction. And so what do we see? Well, we can see over a 90-day period, sharks are aggressively coming down. They've pushed up a little bit, but they are not really doing anything of note, right? And the sharks are over 100 Bitcoin per wallet. I liken them to professional level traders, okay? The Bitcoin whales, again, they're still aggressively selling. It might look like they're doing something else, but they're really not when we zoom out. Essentially, they are continuing to sell. They might be pushing the market up in places, right? You can see here, they might be pushing the market up in places, but all they're doing is grabbing liquidity. And the same with the Kraken. They've been aggressively selling, funny enough, at these high prices. They've been accumulating all along the bear market, and now they're dropping from 121 wallets down to 116 wallets. That's over 10,000 Bitcoin per wallet. So when we kind of stack up, okay, well, there's got to be a buyer and a seller, and we see a lot of retail buying. Well, the selling pressure is all at the higher end. That doesn't give me a lot of confidence in the crypto market. For the obvious reasons is that, do I really think that the retail investors have the mindset to be able to hodl long enough to actually drive the price into a high level? No. Do I think that the retailers have the capital to be able to drive Bitcoin into the higher level? Yes, I do, but I don't think they're going to be organized enough to be able to actually implement that. So all in all, I think that this is a recipe for a massive disaster and downside for price action on BTC. So let's go ahead and jump into the charts. What do the charts tell us about this, right? And so on the daily time frame, we're going to take a look at this one here to start with. here we can see that we have higher highs and higher lows. These have a tendency to break down. This isn't anything unusual. We've seen this time and time again during the bear market. Even though we're pushing up here, we do see higher highs and higher lows, and these do have a tendency to break to the downside. The big takeaway here is that we do see ourselves with a big setup for a bearish structure. Higher highs and higher lows at a much bigger macro level. This, to me, is a big recipe for a massive downturn in the market. Now, I would like to hope that we could just finish this off by coming down between 12,500 and 19,700. No requirement for a new all-time low, but a bear market low. There's no requirement for that, but I do suspect the fact that we probably will, considering that the whales were selling down in November at $15,000. Why would they be selling there if they were not anticipating lower prices than $15,000? So all in all, I suspect that we are likely to see a big downturn. We may be starting to get the formation of that on the micro movements, specifically as we start thinking about maybe possibly starting a trend structure to the downside. Now, under a Z wave, we would expect it to be a zigzag pattern. Okay, so we would expect it to be something like this. Okay, but it's possible that it does shift and change into something a lot more sinister. If it is just a C wave, it could be a 5-wave drop taking us down lower than 10K. It's possible. We don't know for certain until those structures start to emerge. But all in all, the data here isn't giving me a lot of things to be confident on. We're overbought on the weekly, at least according to my stochastic RSI, which, for the record, guys, because there are different ways of setting up your stochastics, mine is on 𝗗𝗓𝗪𝗔𝗥𝗚. And this basically means the open, the high, the lows, the close, divided by 4. That basically means you're taking a candle, okay, on whatever time frame you're on. You're taking the open position, the high position, the low position, and the close position, and then dividing all of those numbers by 4 to get you an average position for the candle. This is different than if you were to look at this on a close. If you, by default, it's on a close position. If you put that onto close, you'll see that we're not overbought on some of these time frames. Change this over to 𝗗𝗓𝗪𝗔𝗥𝗚, and all of a sudden it's going to recalculate and give us overbought positions. Okay, I take an average position rather than a closed position. I don't think the closed position is overly useful for everything that we're looking to do. Okay, so there we kind of see a breakdown. We are also currently finding support on the 50 EMA. We can't just discard that. Even though we have a bearish narrative on our data, it doesn't mean that we can't rally at places. So we do find ourselves with brief support here on the 50 EMA. 200 EMA is a little bit lower, and I do suspect we're going to have to move down towards that. Let's jump on over and we'll take a look at the smart money concepts. Now, the smart money concept shows us things in a slightly different structure. We do have a bullish structure at the moment. Yet to be confirmed, though, and we need to see a break of structure, i.e. we're going to have to break up higher than $31,000 to kind of confirm it. But before we do that, we do need to really come down lower here first. Okay, so I'm looking to come down maybe towards equilibrium. Maybe the 200 EMA will suffice, but we are looking to come down first. And if we do rally up higher than $31,000 after we come down into this kind of low point, then we're going to get a BOS, and that'll be a break of structure, and that will give us a confirmation that yes, we probably have reversed in Bitcoin. Until then, smart money concepts is still up in the air. It's possible, it's not possible. Okay, so we want to be a little bit cautious. Now, this is just the daily time frame. Take this to a weekly time frame, and things are not necessarily as good looking. So for example, we can see there's a fair value gap all the way down here at $17,000. There's nowhere else on this weekly chart do we see a fair value gap. So this particular gap is something that I want to be really cautious on, because I think we could potentially come down towards it. And that kind of lines up with our thought pattern over here on Elliott wave theory. So our weekly timeframes are vastly different to our daily timeframes, and we should be a little bit cautious when it comes to that. Ultimately, I am looking for a move to the downside on the weekly. I do think it's very much needed. And you can see here that we finally are moving down, but we yet to actually break down into the oversold area and actually sustain in an oversold area for quite some time. We can see a big move, or we can see a small move. I think we're going to be expecting a volatile week this week, and next week actually for that matter. So it's going to be interesting to kind of see how all that kind of plays out. From our support and resistance, we can of course acknowledge, if I get rid of that, we're finding the resistance right up here in our supply zone, which was previously demand. So we are looking to come down, in my opinion, towards our $24,000 to $25,000. That actually ties up quite nicely with some of the micro movements that we're talking about this morning in the micro hourly charts for Bitcoin. Okay, so we are looking for a 5-wave structure to come down here, and then I am looking for a move upwards more towards 29K at some point. So I would expect us to see a lot of volatility, a lot of short positions getting liquidated, a lot of long positions getting liquidated, and a lot of people not really knowing how to trade this one. Ultimately, if you've got a stop loss or you're looking to short the market and you're looking for a good place to put a stop loss, I would personally be targeting above $31,000 and looking to ride this down more towards the 20k area and trying to find support. But it will be volatile. You'll see lots of gains and lots of losses all over the place, in my opinion. It's not going to be one for the faint-hearted. But that's where Bitcoin is right now, in my humble opinion. Let me know what your thoughts are in the comments down below. Do you align to this thinking, or do you think we're just going to the moon and we've got a trend line that's going to support that and we're just going to go? Let me know in the comments. If you found it useful, informative, smash the like button. If you're new to the channel, subscribe. Don't forget to join us down in Discord. And guys, I'll catch you all in the next one. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.